Hey, good morning, everybody. Good morning and welcome to Monday. Just want to make sure everything's working the way it needs to. It sure is. How you guys doing? Everybody hear me okay? I know I'm a few minutes early. Hopefully you guys had a great weekend, watched a little football, ate a little food, had a little fun. All right, now I'm going to try it with my microphone not muted. Good morning, everybody. No news is good news, right? Nothing to make that market a little crazy. Guys, remember that it is Monday and Monday morning. Let them wake up the same way we have to wake up, right? Hope everybody enjoyed their weekend. Hope you guys had a good time. How about that game? Snoozer of a first half. Second half was pretty good. Yeah, first half was horrible. Yeah, the Sharks are still hungover. Um, I haven't even considered pulling the trigger this morning. Second half was pretty good, though. Second half was pretty good, and my brother and I were laughing this morning. Don't ever give Mahomes 2 minutes. He'll shatter your hopes and dreams. And that's exactly what he did. Again. And that's okay. It was a good game. I was rooting for the 49ers, though. Guys, I'm excited today. So we're going to do something today. Just you guys, I guess the 10 of you that are here are going to know. We're going to take a lot of pictures today. I'm not... Yeah, that's true. And it wasn't a blowout. It was a defensive game for the first half, wasn't it? I enjoyed it. I enjoyed it. I went over to a friend's house, grilled some chicken, had some fun. Absolutely, Dwight. That's exactly what it was. I like the analogy. Guys, let's check news. Today's Monday, February 12th at 9:20. FOMC Bowman speaks. It's likely to be low impact, is what the news is telling me here, that yellow box. It's 12 p.m. Barkin speaks. That's going to be medium impact, which means that there may be a little reaction there. But there's nothing high impact, those red boxes, until tomorrow at 8:30 a.m. So there's not a whole lot going on in the wonderful world of news that affects us too much. And that's the first thing I do every day. Whoops. Let me get this one up. Do it every day. I'm checking news. I'm going through. Um, Sorry, I just got a message from my brother. Um, just making sure that everything is good, that there's no crazy reactions. And then, let me give you the link here. Sorry, that was a total shiny squirrel thing. Once I check news, guys, everything that I talk about is coming from the Nexgen education page. I'm hoping to use a lot of live market examples today. We're going to talk a lot. One of the things that we're doing here at Nexgen, my brother and I are going to be working diligently to revamp an awful lot of just a lot of the education, trying to make it even easier, if you can imagine. So we're going to take a lot of very simple pictures today. We're going to look at a lot of things. We're going to talk about the rules and what they look like and all that good stuff. So everything that I talk about today is going to revolve around initially a high probability trend trade. This is a trade that typically wins 70 to 80% of the time when you follow the rules. And this is a trade that each indicator on every chart is going to agree for the trade. This is also a trade that when you learn this trade, when you understand what it is that you're looking for, it's teaching you to read your charts. It's focusing on that. It's focusing on making you a chart reader, understanding three very key concepts: where the market is likely to continue, and this becomes an entry spot for that high probability trend trade. Understanding where the market is likely to go. This creates the opportunity for you to get more out of trades, or even more so, to not sit and hope and hold for trades where your indicators are telling you that things may be stopping. And then finally, you're going to understand where the market is likely to stop. And where it is likely to stop is what we call termination conditions. And termination conditions, to be honest with you, they grow as you grow. The whether or not they're likely to hold or likely to break, um, all of this stuff is going to grow. And this is one of the things that I want to put out there today is in the beginning, guys, we're going to speak very much in blanket rules. We're going to talk about recognizing advantages, recognizing trouble, and trying to keep it very, very simple for the new user. But your ability to read charts is going to break you out of that new user mentality. That your ability to read charts is going to open the door for more trades. It's going to open the door for better analysis. But you've got to build a foundation before you try to create a trading plan that is beyond your years. So we're going to focus heavily on three rules, guys, initially. We're going to focus on momentum, a clear path, and an entry area. This is your foundation. This is the beginning. This is designed to make it so that you can read your charts. And then once you can read your charts, guys, I can't say it enough, the sky's the limit. You'll be amazed at what you're able to pull off. But this high probability trend trade is three rules, and each rule creates an advantage. So when the advantages are present, 1, 2, 3, well, that's a trade. That's a trade for the brand new user. That's a trade that teaches you to read your charts. This is a trade that typically wins 70 to 80% of the time when you follow the rules to the letter. And this is your foundation, guys. This is your base building. And these three rules are going to happen on two charts. Your large chart is going to define direction. Your large chart is going to define momentum. And your large chart are going to define areas. And this, once again, I have to say it, is a very basic platform for you to spring from. Your large chart is a broad stroke of a brush, and it will show the overall opinion of the market. It'll show you what the people in charge want to have happen. Your first two rules, the one that provides the advantage of momentum and also the one that gives you a clear path, are going to come to be on this large chart. And then once they're present, you'll turn your attention to a smaller, faster chart. And this is a refinement chart. All this is inside of one bar on the large chart, there's 15 to 30 bars on the smaller, faster chart. So it's almost like a microscope, allowing you to see the action inside of one bar, and it becomes a refinement process, and it allows you to pinpoint where the market is likely to continue. It creates this opportunity for you to reduce your risk, to increase your profit potential, and that's where rule number 3 comes from, and that's your rule for entry. And this two-chart process is summed up in this cool little picture here. The large crowd is the large chart. The large crowd dictates which direction the market is going to go, and then you can trade with that direction to give yourself an advantage. The large crowd will establish momentum, and then you can give yourself an advantage by trading with their momentum rather than against it. And the large chart is going to define the areas where decisions are being made, where buyers buy and sellers sell. And once again, you can give yourself an advantage by not finding yourself caught in their decision-making process. And all of this happens on one bar on the large chart. And then we have the small crowd, the people with enough money to make a little move, but not so much money that they won't get run over by the large chart. We depend on these people because these people fight everything that these guys want. And they do it, and they create these little shoves. And we use that smaller chart to identify their little pushback. And that's where rule number 3 comes in. Rule number 3 takes advantage of the people that are willing to fight the market so that we can go with the flow. And that's what we're going to talk about today. We're going to talk about 3 rules. We're going to keep it simple. We're going to do it on 2 charts, and then we're going to expand from there. So we're going to learn the rules, the trigger line and Fibonacci rules for when it's okay to trade. That's my first hour every day. It may be 3 hours today. I don't know, because I want to take new pictures, and I want to talk about concepts, and I want to break it down as simple as I possibly can today. You guys feel free to simulate in the background, right? Use that Monopoly money. Practice your rules, practice your trades, practice your entries, your exits. But the key is everything that you practice, drop it in the room. Take a picture of it, drop it in the room. Tell me why you did what you did. There are no wrong answers. Tell me what you were looking at that made you want to go long, or tell me what you were thinking that made you want to go short. And then show me where you got in. Because part of my job is to help you do it better. Everything you do, my job is to help you do it better. Whether it is reading your indicators, whether it's finding an entry, taking an exit, my job is to look at your pictures and work with you to try and make it easier, more profitable, less risky. Show me where you get in, where you get out. Always show me both charts. But if you really embrace this one, if you make sure that you're giving me as much information as possible, I'm going to be able to give you the best feedback possible. And then we're going to simplify a lot today, guys. We're going to take a lot of pictures. What are the looks that we're going to commit to? So we're going to break each rule down into pictures. We're going to talk about them. We're going to look at them. And the idea is that you can see these looks so often that they become easy. So much repetition that it creates recognition. And you're going to do that with your spreadsheet. So when you talk about the path to getting to where you want to be ASAP, post your pictures in the class. Let's have a conversation about everything that you see. I guess everybody's still sleeping today. Traditionally, Nexgen isn't open on Mondays after the Super Bowl, but we all got old and we fell asleep early and we woke up early. So here we are. So I think a lot of people maybe were just expecting it, and I wasn't sure about it on Friday. But post your trades, guys, and then use your spreadsheet. Definitely use the first sheet of the spreadsheet, guys. And every morning, study what you did yesterday. This is how you get comfortable with what you're looking at. Just looking at pictures. You got old. You've been there and surpassed it, right? Ask yourself what worked and ask yourself what didn't work. What kept you relaxed and what felt forced. And what you're going to find is that you're going to start to recognize patterns that are bringing you success. Youth worked, man. And it's wasted on the young, isn't it? It is so wasted on the young. Ask yourself what felt forced, guys. You're going to see these patterns that bring you success, but you're also going to recognize these patterns that may be robbing you of success. Maybe it's breaking one of those rules or giving up one of those advantages. And a little study each and every morning is going to prepare you for the day, and it will accelerate the learning. I've watched it forever. Amen, Ron. So that's how we're going to get to where you want to be, guys. Here's my spreadsheet. I'll show it to you. There's 3 tabs on it. The first tab is tracking. Every time I take a trade, it goes in here. And every morning I wake up and I go back and I study it because I want to make sure that I can do exactly what's bringing me success every day. I want to repeat that process. I want what I do to look the same every day. There's a big notes section for feedback. After you present in the class, let's talk about it. The second page is where you're going to build your plan, guys. I'll even pull all these out of here. I want you to find your rules met trade. I want you to find that look that makes you happy. Those advantages coming together. Take a picture of it, post it in the class. And when I say, hey, Josh, dude, this is the best high probability trend trade I've ever seen, or this is the best use of momentum that I've ever witnessed in my life, drop it into your plan, right? That's what you're doing is you're building a plan here. And then I'm going to give you, whoa, what did I do? Whoops, clicked on a link. I'm going to give you 300 pictures of you guys using the software. Next-gen users coming in, embracing advantages, taking great entries. There's a whole section dedicated to NASDAQ, guys. NASDAQ is a different animal. Everybody wants to trade it because it's exciting. But if you don't understand how to read a chart, it can eat you up a little bit. Management, every time you get in the trade, you got to do something with it. There's a section on management, patterns that repeat themselves, termination conditions. So the goal, my goal for you guys, is that you turn your favorite look section into a section that looks like this through all of your pictures, because the more pictures you take, the more recognition you're going to have. So let's talk about rules, guys. Rule number 1, I have to have strong triggers. The large chart needs strong trigger lines, and when I have it, it's going to give me the advantage of momentum. So we're just going to go to the live market. I took everything off of my live market, and we're going to create some new pictures, guys. This is a pretty big look on crude oil, and I want to show you what strong trigger lines mean. When your small triggers, the solid lines break away from the large triggers and space is created. So small break away from the large, space is created between the two, and the triggers are wide in the direction of the trend. Because this is odds favorable momentum. This is rule number one. And I'm going to do this right here. This is rule number one. In an uptrend, the separation between the small and the large lets me know that the odds are favorable for the market to continue in the direction of the trend. Hey, good morning, Chef. And then I also have it here. I have the separation. And I'm just going to put rule one again, guys. And this is the most basic look. This is the most basic. When do I have the advantage of momentum? It's nothing more than a separation between the small and large. It's that break between the two, like scissors that are open, ready to cut. And guys, let's get rid of all of that. This is rule number one. This is the advantage of momentum. So rule number one provides the advantage of momentum. We're going to do a lot of annotation today, guys, a lot of charts. And I'm going to tell you right now, if you scroll back on your charts and you start taking pictures like this stuff's going to become second nature to you. It's going to be very easy. Chef, it's good to see you, man. Long time no see. So guys, here is rule number one. And I'm going to save this picture, and I'm going to save a lot of pictures today. So we'll call it rule one. And I'll give it to you guys in the room as well. So it's a separation between the small and the large, guys. And if I go back on my large chart again, you'll see that it happens over and over. Separation between the small and the large, the market is likely to push in the direction of the trend. Separation between the small and the large, the market is likely to push in the direction of the trend. And it really is this simple. When you take the noise off, you can see just what strong triggers look like. You can see how the market continues. And then the opposite of strong is going to be weak. So I'm going to give you another picture, and we're going to talk about another look. And we're going to do this right here, where I draw an arrow where the small triggers have entered the large triggers. So when the small work back inside of the large, this is a weakening of the large triggers. Anything can happen up or down. So when I weaken the large triggers, guys, rule number two is no longer met. Whoops, do that right there. I'm not used to using the text feature. So when triggers are weak at areas, they are more likely to hold. Reversals and deeper retracements can happen. And it doesn't mean that it's a killer of what we're looking for. It doesn't mean that the market won't continue up, but it means that we no longer have that advantage of momentum. The market is no longer screaming in the direction of the trend. So it's almost like a life cycle. The smalls break above the large and everything is wide, and that momentum starts. And then as it returns, the momentum decreases, and then ultimately we get these weak triggers. And we get the weak triggers, our advantage is gone. Rule number one is no longer in effect. It's no longer a market that's likely to continue in the direction of the trend. So guys, is everybody, and I'm just going to ask, and I know that I see nothing but new guys. Go for God, we got you here. Rule number one being met means that there's a separation. It's like scissors that have been... Look at that. I even made a picture this weekend. I've been thinking about you guys all weekend. When the scissors are open, there's momentum. When the scissors are open, rule number one is in effect. And when those scissors close, well, now we have weakness. So the separation, the scissors, everything open, guys, this is the best of the best. This is rule number one in effect. This is your advantage of momentum. And then once those smalls return to the large, we've weakened and the advantage is gone. And what you're going to find is you'll actually see that life cycle where the separation is strong, the triggers return, and eventually they weaken. And I'm not sure if there's an area there or not, but this is the market that no longer has that punch, that no longer has that push. And then one more picture for momentum, and let me tighten it up just a little bit. Nope, we'll just do it off of this one. When I have odds favorable momentum, I'm doing a lot of annotation today, guys. So this is a perfect day for you to ask questions if you have questions. When I have momentum, it's the most favorable look to buy support on a smaller, faster chart using that refinement chart. And then we'll do a little shape just like that. So the retracement on the smaller chart, whoops, will look like a tail on the larger chart. And you will be able to pinpoint right where the tails are most likely to form. So the idea is that when the momentum is its absolute strongest, when the smalls are outside, guys, we're going to use that smaller chart to refine. You're going to be able to use these tails not only to study, but also to see how the rules come to place. And it's going to give you this opportunity to really begin to develop trust. So we're going to save this one as well. We're creating an all new setup for you guys. We'll call that one tails. And then we'll call this one week. And what we're going to have is a whole new setup. And the idea is that we're going to keep this as simple as we possibly can. So let me ask you guys, is everybody okay with the idea that strong triggers can push a market in the direction of the trend? Weak triggers can reverse the trend, create a deeper push. And then when I have that momentum, let's take one picture to the other side as well. When I have strong triggers, and watch this, I will be just as good. The tails are going to represent opportunity. And I'm going to show you how that works. I'm going to copy paste so life is easy for us here. So what the tail is, and I'll show you the two-part process, Gopher. Let me save this one and we will call it tails down. And I'll show you exactly what those tails are. When we have the best of the best, when we have the momentum, when everything is solid and cranking in that way, these tails on the large chart is this little retracement on the small chart. So what we're doing, Gopher, is we're recognizing the momentum on the large chart, and ultimately we're going to recognize a clear path on the large chart, and then you're going to use that small chart. We don't trade the tails. We trade this small retracement, right, to an area on the small chart, and see how the circle on the small chart, it's going to line up with the bottom of the tail. So this is the refinement process. What happens in one bar here, we're literally going to refine down to 15 to 30 bars on this small chart. And this tail, you're going to be able to pinpoint where it's most likely to continue by using the smaller, faster chart, and that becomes your entry for the highest probability trend trade. Does that make sense? I hope. And let me put my template back on this chart, and I'll show you kind of what it looks like once they all come together. So guys, I know that today's a little bit slower and we're taking pictures a little bit slower and we're annotating a little bit, but I'm trying to put them all in there. And this is crude oil. And I'm not saying that the rules are met, but check this out. If I circle the tail, it pulls right back to support inside of favorable large triggers. We're learning right now how you guys can pinpoint this entry, how you can enter at 76.07 with virtually no risk and everything going up because the large chart says that we have the momentum. Did anybody catch that trade? hopefully. If not, that's okay. So guys, that's momentum. That is the beginning. Recognizing momentum is going to put you in a position where you're always looking at a market that's likely to continue in the direction of the trend. Momentum is going to be a facilitator of breaking those key areas. Momentum is going to allow you to probably cover some mistakes or to have an advantage trading into areas. Momentum, in my opinion, is the one that you shouldn't let go of. Momentum is it fixes things, guys, and it's an outstanding look, and that is the most favorable look for utilizing rule number 3. And that's rule number 1. Is everybody good with that? Can I go on to rule number 2, where we start determining areas likely to stop the market? Because we need to have a clear path. We need to have nothing between us and where we're trying to get to. So we do that first by identifying areas on the large chart. Remember, the large chart is going to define areas. Each and every one of these areas that you're looking at is an area where a decision is being made, where the people that are in control, the large crowd, they may be entering, they may be exiting. These lines also represent the areas where the two forces may be fighting one another for a little bit for supremacy. And the advantage that the Nexgen user has is that we know where they are before we ever get there. We know that there's resistance in the distance. And when price gets there, there may be a decision made. And we know that there are these yellow 1-to-1s, and we know long before we get there. And it gives us an advantage, and we don't have to trade into it. So for the brand new user, it's a pretty simple recipe to understand an area that may hold or break. And this is very, very basic. And this is for the brand new user, guys. And there's a 2-part process, and I'm going to see if I can find a little bit of a clear path before it gets there, just to make it easier on the picture. Here we go. We'll use the giant move up, guys. Price is represented through price bars. And when price reaches an area, whether it is a fib, a mid-band, a yellow 1-to-1, if it is a divergence high or a divergence low, when price reaches the area, the decision-making starts for the people in charge. Buyers may buy, sellers may sell, and you guys have this simple recipe. When price reached 77.29, when price made it through and hit this area, all of your trigger lines remain below. And when they did, that's an indication that an area may hold. May hold. It's not a guarantee because it went right through the previous. Decisions are being made. No decision was made at 77.14 because the people in control were trying to get here. So in the moment, we stay out of the way, and ultimately it reverses the market, guys. And you'll see that it happens from lows. It happens from highs. You'll watch the market bounce off of these key areas and continue because they can't get caught between two areas. And look how it does it here. From resistance to support, we get a bounce. Support breaks to the next support, and that support behaves as resistance, and we get a bounce. And the market continues down, and then it continues up, and it's going to go through this all day long, guys. It's going to be cyclical all day long. The market's going to bounce off of areas. The easiest money is made in between key areas. So when we're talking about taking advantage, recognizing areas that may stop, it's a very simple recipe. If price reaches the area, if your dynamic wrinkle bars reach an area, all I want you to do is ask yourself, where are my trigger lines? If they remain below the area, if you're trading up into it, or if they remain above the area, if you're trading down into it, this is an area that may stop the market. And this is a very big blanket rule for the new users. If price reaches support and the trigger lines are above, sit on your hands and do nothing. Wait for a second, let the decision be made. If price reaches resistance and the trigger lines remain below, sit on your hands and do nothing because you don't know what the reaction is going to be. And this is the very, very basic identifying a termination condition. And that's a very simple recipe for it. If price reaches an area and the triggers don't break, it means that it's an area that may stop the market. Is everybody okay with that simple recipe? The easiest way to begin to recognize it is go back and look at how often these areas hold. And you can do it on all sorts of time frames, guys. You can see how no triggers get through support and the market continues up. And you can see how it pulls all the way back to these one-to-ones and the market continues down. So we're creating this awareness of where the decisions are being made. And it gives us the advantage of having room to our targets when it's time to get there. So termination conditions. Price reaches, where are my triggers? That's all you have to ask. I have to figure out a better way to get termination conditions. But this is your most basic, guys. And I'm going to show you the picture. And it really is this simple. If price reaches the area right here, and the triggers remain below, it's okay to do nothing. We're going to wait and we're going to see what happens. And then the flip side is if both small and large clear the area, small, large get above resistance, resistance begins to behave as support. The area is broken. The path is now clear. Notice that you'll also have odds favorable momentum here. And there's one of those tails, one of those potential pullbacks on the smaller, faster chart where you guys are going to be able to pinpoint exactly where the market is likely to continue. So at a high, if the market creates divergence, there's a loss of momentum, not a termination condition. But if price reaches that divergence high, now it's a termination because the trigger lines have remained below. If price reaches resistance and the triggers are below, now it's a termination. And if price reaches yellow one-to-ones and the triggers remain below, now it's a termination. Same thing at lows. Price reaches yellow one-to-ones, where are my triggers, so on and so forth, guys, all day long. Termination conditions. Areas either hold or break. The key is that we're not going to get caught in that decision-making process. If price reaches these yellow one-to-ones and the triggers remain above, it's okay to sit on your hands and do nothing. You don't know if the market's going to bounce. You don't know if the area is going to break, and you really don't have any idea as a brand new user if there's just going to be a giant fight that you don't want to be a part of. Ultimately, this termination after a giant fight in the market creates the full reversal, and it gives you odds favorable. And there's that tail, that potential entry. And guys, this is for the brand new user. As price reaches an area, it's okay to do nothing. And there's going to be a time where you say, you know what, this resistance is more likely to break because it's coming from a termination that creates a full reversal. And there'll be a time where you say, this support is likely to break because it came from a termination with weak triggers. And the yellow dots go for a great question. The yellow dots are fibs that print in the moment. The moment is the easiest way to say it. But let's go down to the glossary of common terms. So what a fib is, it's a 100% Fibonacci projection. Your software measures larger swings in the market from A to B, from B to C. I don't know exactly what the parameters are for it, but what I do know is that when these one-to-ones print, they represent the distance between A to B, and institutional traders love to use 100% Fibonacci projections. So my software prints them for me real time. And if price reaches them and my triggers remain below, I'm not going long into them because this is an area that may stop the market. Does that make sense? So these fibs will be there for most of the day. These yellow one-to-ones will literally print in the moment and update and give you an advantage even stronger because it represents that kind of instantaneous 100% Fibonacci alternate. Great question. And you'll see them on your charts. You'll see them all day. You'll see them print and look at the bounce that happens and it doesn't quite break and eventually they're no longer needed and they'll stop printing. But it's kind of an in the moment. There's your NASDAQ finally breaking to the downside. This is a pretty good one. Price reached the support. The triggers all remained above. No short trades, not yet. Small and large get below the areas. Notice the tails pulling right back to the resistance areas. Guys, this is where you're pinpointing. Odds favorable, pulls back. There's your tail. Right there at 32. And right there at 32, it pulls back to resistance inside of favorable large triggers. And that's kind of what we're piecing together right now, is just gauging those advantages. Now your small triggers have worked inside of the large triggers. There's a visual weakening of strength, and look how the market pushes up. These lessons repeat themselves each day, every day, over and over. And the idea is that we're going to keep taking pictures of them until they become easy. So can you guys give me a Y in the room if you're with me? If price reaches an area and the triggers don't break, it's all right to do nothing. Not every dollar can be your dollar. Not every move needs to be your move. But if you sit on your hands and you're patient, you can wait for the best of the best. And if a termination reverses the market, guys, that creates a strong bottom. And a strong bottom is the precursor to the highest probability trend trade that you can take. And a strong top, which is a termination that creates a full reversal, is the precursor to the highest probability trend trades you can take. So 90% of your day will be waiting for the advantages. 10% of your day will be hopping on them when the market gives it to you. And remember, you can't take from the market. The market only gives. Sometimes the market reverses from nowhere. Sometimes we get these looks at a low where the path is clear, and sometimes we get a look at a high where the path is clear, and you may even have odds favorable momentum. And the market seemingly turns from nowhere. So we've let the large chart define the areas. We let the institutional traders react to the places, the lines on the large chart. There's one more termination condition that you can see on a smaller, faster chart on that refinement chart. And that's using divergence. Divergence is just a loss of momentum. That's all it is. When you see a cyan line, which is a light blue line, print off the bottom of a pivot, and it's accompanied by a negative number, percentage, and just a heads up, guys, the number means nothing. It's just a byproduct of the calculation. But with that negative number in this cyan line, I know that there was a loss of momentum. So 3 losses of momentum in the same price range may terminate the trend. 3 divergences in the same price range may terminate the trend. That keyword may, never guaranteed. If your large chart is weak and your small chart is putting 3 divergences up, guys, that's pretty powerful. If your small triggers work their way inside of the large triggers on your smaller, faster chart, that's powerful as well. That's that anything can happen weak in triggers look. And then for you patterns followers, 3 pivots, the third one, excuse me, is higher than the previous, creates a head and shoulders pattern. That adds fuel to the fire. And the same is true up top. So you're going to see this look at a low or this look at a high when that slower broad stroke of a brush can't give you the information in time. And 3 divergences will be enough to keep you from taking that final short or keep you from taking that final long. And then in that same boat, if you are in the perfect short, your rules are met, you have the advantages and 3 divergences print, this will become a management opportunity for you. This will give you the opportunity to recognize that things may be changing and it's okay to take profits and not hope for that next area because you will visually see the change on a smaller, faster chart. So guys, this is rule number 2 in a nutshell. The whole idea is that it provides you room to the profit targets, that it gives you the opportunity to have room to make money rather than trading directly in the areas that may stop the market. It provides the advantage of a clear path. So we've seen strong triggers. Strong triggers create the advantage of momentum. It happens on the large chart. So our large chart is defined direction, right? The background is green and it's going up. And for the new user, that's an outstanding way to stay on the right side of things. For the experienced user, you may find that there's opportunities outside of the color of the background. Large chart defines momentum. And momentum means that you have the advantage of a market that is likely to continue in the direction of the trend. And then the large chart has defined the areas, the places on the large chart where the people in charge may be reacting, where the people that move the market might be entering, might be exiting. You'll see fights at these key areas. And now you guys are able to not get caught in that fight. So is everybody comfortable with rules 1 and 2? Everybody feels pretty good about it. We let the large chart lead the way. We made sure that we have a market that's likely to continue in the direction of the trend. They haven't reached an area. All of this happens on one bar, the most current bar on the large chart. So now we need to let the small crowd do their thing, guys. Now we need to let the small crowd come in and create that shove, that little pushback. And this pushback is going to get us to our area of entry. On the large chart, it's just going to look like a tail. But we are going to recognize on the smaller chart where that tail is most likely to happen. Post a picture in there, John. Let's see it. So rule number 3 says that I'm going to use a limit order. I'm literally going to be able to wait to the market. I'm going to be able to pinpoint where it's most likely to continue. So I will wait for price to come to me, and I'm going to use a limit order to buy or sell a pullback. And that pullback is the little shove that the large chart or that the small crowd creates. And that pullback is going to be in an area. The way we use areas on the large chart, fibs, mid fibs, 1-to-1s, divergence, highs and lows, we're going to use lines on the small chart. We're going to use fibs, we're going to use mid bands, and we're going to use yellow 1-to-1s. And then John's showing that great example, excuse me as my voice cracks, 3 divergences in the same price range, and look at the shove down that happens after. Pretty outstanding to be able to recognize this in the moment, to be able to use it as a safeguard. And John, if you were long right here, it gives you the opportunity to not lose any money on the trade. Nicely done. So we're going to use a limit order to buy or sell a pullback at an area, fibs, mid-bands, yellow 1-to-1s. And those areas are going to be inside of what we call favorable large triggers, guys. And favorable large triggers simply means that your large triggers, which are 1/2 of the equation for momentum, the smooth on the smaller, faster chart, and your synthetic triggers, which look just like the large triggers, but they have little steps on them. Synthetic is a fancy word to say from another time frame. And your synthetic triggers on the smaller, faster chart are nothing more than the large triggers from your large chart. Whoops, I'm having struggles there. That is an interesting look. So I'm going to reload data. When they overlap, when they're one on top of the other, guys, this is your best look. This is where everything is coming together. This is where it gives you the smallest range to have those areas, those fibs, those mid bands, those yellow 1-to-1s. When they're nestled inside of these triggers that are one on top of the other, what it does is it creates the smallest point where the market is likely to continue. And when you have the smallest point where the market is likely to continue, it allows you to reduce your risk dramatically. So favorable large triggers for the brand new user is one of the best advantages that you can give yourself for an entry. And I'm going to pull up and we're going to go through the entry sequence for when it's time to look for a trade. And everything has to start on the large chart, guys. The large chart is in an uptrend. The background is green. And if you look at the most current bar on the large chart, I have the advantage of momentum. Small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. Everything says up, and it says up with strength. I have not reached Fibonacci resistance, and I have cleared small and large above the previous area. I have a clear path. I have room to my target. Everything on the large chart, on the broad stroke, says that the market is likely to continue up and there's nothing in its way. So I'm going to turn my attention to the smaller, faster chart. I'm going to let the small crowd do their thing. And the small crowd doing their thing begins with a reversal bar. So when everything says up on the large chart, I'm going to wait for a reversal bar on the smaller, faster chart. And once I get this reversal bar, I'm going to look for my favorable large triggers. I'm going to look for my large triggers, the smooth ones, And my synthetic triggers, the dashed ones, and it doesn't matter if the synthetic are on top of the large or the large are on top of the synthetic. It doesn't matter which is which, but I know that my areas have to fall within these triggers. So the tighter that they are on top of one another, the more likely I am to have a smaller window of opportunity, that point where the market is most likely to continue. So once I identify my triggers, I'm going to look for the areas that fall within fibs, mid-bands, yellow one-to-ones. And my window of opportunity, the woo, extends from my highest point of support, which happens to be a mid-band in this case, to my lowest point of support, which happens to be yellow one-to-ones. And I can create a box from that mid-band to the yellow one-to-ones, and this is the area where the market is most likely to continue. This is the point where if the small crowd is able to do their thing, this is where the bounce is most likely to happen. The trigger lines give it a place to correct to. The areas within give it something to bounce off of. So all we have to do as rules-based traders is activate a limit order just above the highest point of support inside of favorable large triggers. This becomes your entry for the highest probability trend trade you can take. This becomes the best of the best, guys. When you have momentum, when you have a clear path, when you wait for the reversal bar and you identify the window, this is your best chance of success. And if the market pulls down to it, you're in a trade with every advantage. You're in a trade with momentum, you're in a trade with a clear path, and now you're in a trade with an entry area. And then we're going to go through a little bit more on this one. Because you have defined where the market is most likely to continue, because you know where that bounce should happen, you also know where the market shouldn't go. And 4 to 5 ticks below that window of opportunity, you're going to place a protective stop, and you're going to say to yourself, if the market extends beyond this area, well, then I'm going to place a stop here. And when I place a stop here, if the market continues and hits it, I'm out of the trade. I don't want to be in the trade. My advantage is gone. And this is kind of tough for new users sometimes because they're like, man, what good is the methodology if I'm going to take a loser? And I have to remind you guys that anything that wins 70 to 80% of the time, guys, they're mathematically obligated to lose 20 to 30% of the time. And this really is a cost of doing business. And this is one of the reasons why it's so important to put your rules on the chart. When you take a trade, if you take a loser, it's okay to take a loser. It's all right if every trade doesn't work. That's normal. And that's exactly right. So what we have, Gopher Guy, and let's break it down into exactly what it is. The box represents where we expect the market to continue. From the highest point to the lowest point, right? This is where the market should go and where the market should bounce if I'm going to have a trade that works. Which means that out here, this is where the market shouldn't go. We don't expect it to bounce off of, or we don't expect it to exceed the yellow one-to-ones if this is going to be part of my 70 to 80%. And since we can pinpoint exactly where it's likely to continue, we don't have to sit there and let the market drop 20 points below that area, wishing and hoping and wanting and waiting. We literally just say to ourselves, hey, I'll give it 5, 6 ticks. And if it goes beyond that window of opportunity, I'm just going to jump ship. I'm going to take a little hickey, a small loss, which is a normal part of a positive equity curve. And I'm going to wait for the setup again. And what you'll see is I've actually got pictures in my spreadsheet showing the rules being met. Odds favorable momentum. No termination conditions, and the perfect entry in an area inside of favorable large triggers. And this is one of those lessons where 70% winners loses 30%. Every 10 trades, I'm probably going to lose 2 to 3 of them. And I'm just going to allow the market to be wrong, right? I'm going to let it be wrong with dignity, and I'm going to be okay with it But guys, this is why it's so important to write your rules on the chart, because if you go through the checklist every trade, I had odds favorable momentum, I had no termination conditions, I had the area inside of favorable large triggers. The reality is it lets you go, well, this is cool, this was everything, this is all the advantages, this is the best of the best. It simply didn't work. And it makes it easier to accept losers. It makes it easier to be okay with the idea that they can't all win. And by knowing where it's likely to continue and putting a stop where it shouldn't go, what it does is it reduces the losses. It makes the losses smaller, which allows you to get more out of the winners. So, good stuff. And guys, I have a broken chart, I think. I most certainly do. So I'm going to try to build a new chart real quick. But before we do that, we'll stay off of the live market for just a moment. I'm going to go through the entry sequence the other direction. When the large chart says go, guys, when the large chart says odds favorable, the large chart says clear path, we're going to wait for the reversal bar on the smaller, faster chart. We're going to wait for that signal that the small crowd is doing their thing, that the small crowd wants to fight, that the small crowd wants to give a pushback, and we're going to get excited because this is the beginning of our process. And once we see the reversal bar, we're going to find those trigger lines. And we're going to look at those trigger lines and we're going to say to ourselves, do I have areas within? Do I have fibs? Do I have mid bands? Do I have yellow 1-to-1s inside of those trigger lines? And I'm going to refine my areas even more. Whoops, that's the other direction. I'm going to find those areas. And inside of those areas, I'm going to say, well, this becomes the point where the market is most likely to continue. This is where rule number 3 is met. This is where my advantage comes. So I'm just going to right click and I'm going to activate a limit order at the bottom of that window because of the momentum on the large chart, because of the clear path on the large chart. I'm not going to try and catch it at the top. I'm not going to trip over a couple pennies hoping to save a few dollars. I'm going to get in at the lowest point because this chart is absolutely screaming. And if that market comes back to me, well, now I'm in a trade. I'm in a trade where the market is most likely to continue. I'm in a trade that has the advantage of momentum and nothing in the way. And that area inside of favorable large triggers. And then once again, because I understand where the market is most likely to continue, I know where it shouldn't go. So I can have a protective stop waiting. And if for some reason it shoots up beyond it, I'll be out of that trade. I'm going to say, hey, it's a cost of doing business. It is what it is. It's all right. I'll wait for the next best setup. But the reality is if I'm following my rules and I'm taking these best of the best entries, guys, I'm never going to miss that entry. I never want to miss this great rules-based entry because 70 to 80% of the time, this is my result, 70 to 80% of the time, it's going to that next area. 70 to 80% of the time, it's allowing me to reduce my stop even further below the reversal bar in the direction of the trade. 70 to 80% of the time, guys, this is why we focus on it as new users, because what it does is it allows us to create confidence through the memory of success. It allows us to understand the advantages of momentum, the advantages of a clear path. It lets us identify areas that may hold, that may break. And what it does is it creates this outstanding foundation. And it's from this foundation, whoops, what did I do? It's from this foundation that you're going to grow. It's from this foundation that you're going to get to where you want to be. So I put this together, and I'm going to share this before we start going through giving checklists and all that good stuff. The key to all of this is having a foundation, guys, building a solid platform from which to grow. And understanding the basics, understanding the very key concepts that are going to set you up for success long term. So for new users, one thing that I do is I blanket rule. And I want you guys to understand this, is I blanket rule with very conservative rules for the new user. And we focus heavily on the recognition of advantages. And I'm going to give you a solid plan that's going to optimize your chances of success as you learn to read the indicators. Because the reality is confidence comes through that memory of success. Trust comes through the memory of success. It comes from the study. So we break it down individually so that it can be studied every day, so that you can take pictures of these concepts and become comfortable. So for the brand new user, guys, all termination conditions are bad. Is that true? Absolutely not. There will be times where your chart reading tells you that this area is likely to break. And for new users, though, no momentum is bad. But that's not a true statement, because even with weak triggers, you can still find opportunities if everything else lines up. And for new users, not getting in at the areas inside of favorable large triggers is problematic. This is how it's preached from the pulpit. But the reality is, guys, is the more time you spend with this, the more you're going to see. And the better you know your rules and the advantages, the easier it becomes to find the exceptions. So I don't want you to feel like you're shackled to the high probability trend trade, but I want you to embrace the idea that you need to learn these basics so that you can grow from them. And let's see if my chart decided to work, and it did not. I'm going to build a new 13.2. Sorry, guys, I'm having a million flavors of technical difficulties this morning. And I can't for the life of me figure out why. This has been pretty much my whole morning. That's NASDAQ. So NASDAQ 13.2, 2024. And we'll see if this reloads. I'm going to try and build a new one over here. Man, I've got gremlins. And gremlins happen sometimes, and I don't know what I'm doing or what I'm doing wrong here. So what I'm going to do is I'm going to close my workspace. And guys, I want you to know that nobody is immune to gremlins. You had them too this morning? Right on. And I was working with my brother this morning. What did you guys do to fix it, Lyle? I think I've got a glitch in my data somewhere, and I think that's what's happening to me, is I've got a problem with my data. There is something corrupt in the mix. You watch them. That's the best way. That's always the best way. So while I go through and try to fix this, guys, I'm going to give you a high probability trend trading checklist, guys. And this was designed, once again, and I say this a lot, to optimize your chances of success, guys. This is designed to create confidence through the memory of success. This is designed to give you the absolute best of the best, to give you that trade that typically wins 70 to 80% of the time, so that you know what you're doing, so that you're comfortable with what you're doing. This is a trade that I've never had anybody follow this checklist to the letter and do worse than 70%. Oh, Andy, I see you're in here now. Thank you for the heads up on the video. I think I got it all fixed. Guys, all this does is it reminds you to speak to yourself in terms of advantages. It reminds you to say to yourself, I have advantage of momentum, and I have the advantage of a clear path, and my entries come from areas inside of favorable large triggers. And you can use this in the live market, print this out, and check yourself before every trade. But this becomes an even bigger resource when you go back and you use market replay, and you're committing these looks to memory and you're practicing the execution. You can literally pause market replay, and go through your checklist and make sure that everything is met. And again, never in the history of the checklist have I had anyone follow it truthfully and do worse than 70%. Remember that we're in this to win, guys. We're in this to get paid. I'm going to give you the same checklist talking about terminations, good top or bottom, that create a full reversal, showing you visually what odds favorable momentum looks like, and what weak triggers, what that advantage going away looks like. When price reaches an area and the triggers remain below, you know the path isn't clear. And when both small and the large break above that area of resistance, it's now broken, it behaves as support. And then even as you grow with the software, you'll be able to identify areas that have the potential to break because of momentum, because of trigger lines. And then identifying where the market is most likely to continue, that window of opportunity. So this one's designed for you guys that learn visually. Take a look at it, study it for 30 or 3 or 4 minutes every morning. Make sure that you know what these look like. And if you're not sure, always ask in the room, right? Always say, I'm getting frustrated. Hey, having a little bit of a challenge here. Mark, help me with odds favorable. Mark, help me with a clear path. Help me get to where I want to be. And if you raise your hand and you ask, guys, I'm always going to give you the answers that you need. And then finally, I'm going to give you a plan. And this plan is designed to optimize your chances of success with a high probability trend trade, or what will ultimately be your first medium probability trade, the 50-50 trade, which means that strong triggers are breaking through an area and it has the potential to break. But there's a different way to take it. There's a different way that you have to look at it to go after it. It's going to be your simulation, your study, your class feedback, your continuous practice. Guys, that's what's going to have you creating your own plan. That's what's going to give you these advantages. That's what's going to make you a chart reader. That's what's going to get you to the point to where you're not stuck with that high probability trend trade. You're really taking your trades based on your ability to read your charts. You will craft a plan, but you've got to get those basics down first to make it easy. So your simple plan, provided by me here, is don't fight the large chart direction, guys. If the background is green, it's okay to only look for longs as a brand new user. Doors will open. If the background is red, it's okay to only look for short trades as a new user, and doors will open. Don't fight the momentum, guys. Go with the large crowd. Go with the flow. It makes it a little bit easier, and it's really designed to keep you safe. So we identified an entry. That's the first part of everything that you do, is getting in at the right spot, getting in where the market is most likely to continue. And guys, I apologize if I sound like I'm thinking a lot about what I'm saying. It's because I'm trying to multitask a little bit. Strong bottom, right? Determination that reverses the market. Odds favorable momentum. Making sure that you have that best of the best, that you have that momentum. That means that the market is likely to continue in the direction of the trade. And having no termination conditions, no decision-making points that are going to affect the path of the market. And I am going to download some fresh data, guys, and see if I can fix some stuff. And then making sure that you have the area inside of favorable large triggers. Guys, this is the first step. If you spend 20 days focused on getting into the market, recognizing advantages, asking a million questions, if you really spend just a couple weeks giving yourself this insanely good platform, it's going to open a million doors for you, and you're going to find your groove. And then once you get in, you're going to have to manage. We keep entries very pragmatic for the new user. We keep them very focused for the new user. They're very black or white, almost boring for the new user, so that it keeps it simple. You're not shackled to that, right? You're going to become a chart reader. It'll change. But as you're becoming a chart reader, the same approach to management becomes advantageous to help pull your opinions out of the market just a little bit, to help pull your hopes, right? Your wishes and your wants, and simply keep it focused on the best of the best. That's how management tends to be the most advantageous for the new user. And it all starts with an entry at the area where the market is most likely to continue. So your very simple management plan for the high probability trend trade revolves around an entry at an area inside of favorable large triggers. And then once you have that entry, because you're so darn good at reading charts, guys, you know where the market shouldn't go outside of that window of opportunity, and that becomes your stop. That becomes the point where if the market continues up, you cut ties with it and you say to yourself, that's okay, that's a normal part of a positive equity curve. But because you had momentum and because you had no termination conditions, and really because you took the greatest entry at the area inside of favorable large triggers, more often than not, the market's probably going to bless you with a reversal bar in the direction of your trade. So we begin the if-then, right? If I get in where the market is most likely to continue, then my stop goes where the market shouldn't go. And if the market decides to go in the direction of my trade, then I'll reduce my risk above that reversal bar. I will give myself an opportunity to lose less if this one decides to go against me. And guys, 2 to 3 times out of every 10 trades, it's likely to. 2 to 3 times out of every 10 trades, you're going to take this small little hickey and you're going to be like, whatever, I'm going to wait for the next best set of advantages. But with all those advantages, once again, more often than not, guys, we're seeing that first profit target hit. And so for the new users, it's only $100 in the distance. And it's only $100 in the distance because getting paid feels good. Getting paid creates confidence. Getting paid gives you the opportunity to trust the methodology, to be like, yes, you're going to hear Ninja Trader tell you, hey, Cav, profit target reached, and your palms are going to dry up and your pulse is going to slow. And those butterflies are going to leave your stomach, and you're going to be like, this is amazing. All that momentum and that clear path, and it bounced right off the right spot, and now I've got money in the bank. Let me go break even and have zero risk on this trade. And guys, zero risk that soon, it's a little aggressive. And you're going to get hit break even a lot. But what you're doing is you're reminding yourself that the large chart had odds favorable momentum, and you're reminding yourself that the large chart had absolutely nothing in the way, and all you're doing is you're developing trust in the large chart, and it's easier to do nothing when there's nothing at risk. So for the brand new user, if the first target is reached and the money's in the bank, then you go break even. And it's either going to get you break even or it's going to hit your second target. And once again, guys, very small targets for new users because confidence comes from the memory of success. That second target is only $200 away. We're trading 2 contracts. And if it hits that second target with all the momentum, and it hits that second target with the clear path, and it hits that second target with the perfect entry, you just made $300. And guys, that is one trade. All the advantage is $300. And if this is the best that you can muster each and every day, and it's not, that's a $1,500 week, ladies and gentlemen, and that's a $6,000 month, and that's a $72,000 year, basically, because of course there's holidays and stuff like that. But the idea is to get used to winning, and it's easier to get used to winning when you win small, right? I believe in this methodology, and it produces results. Therefore, I'm going to continue to embrace the idea that this is my path. You guys, that's all this is designed. Even your management plan will change when you learn to read the indicators. But this is the best of the best for new users. This is your highest chance of success. This gives you the opportunity to get paid. This gives you a platform from which to grow. And that's what this first hour has been focused on, guys, is creating the ability to read your indicators, because once you can read your indicators, the sky is the limit. And I believe that 100% wholeheartedly because I've gone through the exact same thing that you've done. So there's your KISS plan for success. And I'm going to tell you right now, I've had people probably in this room get funded on those prop firms within their first 30 days with Nexgen by keeping it focused and keeping it simple. This guy, yeah, Chef, I was hoping, I didn't want to put you on the spot. But within 30 days with Nexgen, funded. And then, Chef, did you do the same thing where you started breaking outside of the plan and have to reel yourself in? Because that's the second part, and that's the reality, is you start getting too smart for the checklist that brought you success. And you find yourself taking more risky trades and not getting the same results, and then coming back to it is typically advantageous. And then the second thing, guys, is the KISS plan is nothing more than something that was put together to help you guys, but eventually you're going to be chart readers. Whoops, that's the one that I wanted. So I'm also going to give you a template to build your own plan. As you begin to see momentum style trades or HVA trades or whatever it is, you can create your own plan. You slow down on your trading so you can focus more on the training videos. Right on. Usually when people do that, Chef, and this is a big part of it, right? And I'll tell a little story before we go on the first break, is I spent an enormous amount of time in my professional career before I was teaching you guys. I spent it training managers. Hey, look at that. I've got crude oil. I spent it training people to do what I did. And I did it through checklists. And I did it through... Let's see if NASDAQ will come up. I did it through simplicity, and I really did, as I gave people this checklist. and said, this is how you succeed in my arena. This is how you succeed coming on to work with me. And new people always take the checklist and they run with it and they believe in it and they embrace it and they rarely deviate from it because deep down inside, we're all rules followers, no matter how rebellious we like to think we are. But we're also egotistical because we're human, and that's okay because I've got the biggest ego that you'll ever meet. So about 30 days in, my managers would get what I called the 30-day stupid. And they would say, I am so good at this that I'm going to abandon everything that brought me success. And the reality is they just didn't have enough time, enough muscle memory to make it routine, to make it mindless. And a lot of day traders do that as well. Right around 30 days, we think that we've got 3 years of expertise because we've been so focused on the best of the best that our success has been outstanding. And then we deviate, chef, right? Just a little bit. And we're like, I'm so good at this, I don't need this checklist anymore. And you start realizing that it's not muscle memory yet. And that's all it is. And that's where you take a deep breath and you come back to what brought you success. And you keep doing it. And guys, it typically takes, depending on the people, it takes 90 days to 120 days for this to become second nature, for this to become instantaneous, for you to look at your chart and say, I don't have odds favorable momentum, I'm not going to take a trade. I didn't have a clear path, I'm not going to take a trade. I don't have a clear path, I'm not going to take a trade. And to say to yourself from that instant read, hey, my rules just aren't met yet. Let me take a second, let me wait until they are. So until you get to that point, guys, it really can be easy and it really can be simple if you allow it to be. So that's my first hour. And Gopher Guy, it really is. And I'll never lie to you and say that you're going to have this on day one. But you've been with me about 3 or 4 days, right? And that's kind of where we're at. And day one, that was it, right? There's poor Gopher Guy and all the information blasting him. That's how I felt. But then from here, it gets a little easier. So from here, you're like, all right, I'm 3 or 4 days in, and I'm not where I want to be, and that's okay. Give yourself a little grace. How could you, right? You're brand new. But what you can say is that I do understand the very basics of the direction, right? I understand that if the market's going up or down in that new user scenario. And I understand that if it's green here, then it's green here, and I have strong triggers, and that's the advantage of momentum. Gopher, are you pretty cool with this one so far? Up, down, strong triggers? Because that's like the first layer of bricks. And then you start working on those termination conditions. And guys, termination conditions are the most broken rule out there, which is why I try to keep it so simple for the new user. That if price reaches one of those key areas and the triggers remain above it, it's okay to say, no, I'm not doing anything, right? And look at how it's identified a market that's range bound. That's a termination, and that's a termination, and that's also a termination. And if you never have the clear path, well, then there's just no reason to wish and hope. But it takes a little bit. You've got to go back and you've got to look at these. Weakening triggers right at resistance. And I wonder if, and I think that's the one that John showed us, since it looked like it was going to go up at 936 and we're thinking, man, this is odds favorable and beautiful, isn't it outstanding that 3 divergences give us the opportunity to manage out of that trade, to not be a part of the long anymore? And John, just curious, did anyone take that long with odds favorable and everything going up, and then when the divergence is printed, get out of it without a loss? Because that's that management, being able to recognize these things in the moment. So Gopher Guy, I know it's a lot, and I'll never pretend that it isn't. But the more simple you keep it, the more focused you keep it on advantages rather than wins and losses, right? The more that you focus on, where's my crude oil? Whether or not I have momentum and a clear path. And you guys notice how we don't? We had a clear path, and it pushes all the way down. And now this looks exactly like the manual. weak triggers at resistance at a divergence high. And this is the look right here. Strong up, retracement, weak in, all these areas. This is the one, more often than not, has me looking at maybe a fib down here going, this one's more likely to break because of this great look at the top, because of this strong look at the top. So you're going to get there, you're going to piece it together, and life is going to be good. It just takes a minute. So guys, give yourself some grace. You're new. It's okay to be new. Focus on the individual pieces, and then eventually, from the individual pieces, you'll be able to put them all together for a trade. And until you've got it down, use your checklists. Until you've got it down, go back and circle those tails. Go back and circle those tails on the large chart and see if they line up with support inside of favorable large triggers, or see if they line up with resistance inside of favorable large triggers. And if they did, start filling up your spreadsheet. Start making your section look like my section. And guys, that's your path to success. That's the easiest way to get to where you want to be. And it hasn't changed in about 20 years. Learn the rules. We just did it. Simulate and post. Simulate and post. The more you post, the quicker you get to where you want to be. Keep it simple until your brain can accept everything and register everything and do it quickly. And then add trades. Get good at the easy ones before you try to add the hard ones. Get good at 2 charts before you add a 3rd chart. So, all right, guys, that's the first hour. It's pretty much the same hour every day of every week. There's your termination. The reversal is there. Just waiting for rules to be met, right? Let's see if NASDAQ broke out of its range. Not yet. Rule number 2 has got every one of you sitting on your hands and waiting. Rule number 2 has every one of you saying, I don't have a clear path. I'm just going to wait. I'm going to wait. It looks like it's pushing up, but all of my triggers are below resistance. Let's let them get above, and then we'll look for an opportunity to make money. So guys, that's the first hour. I'm going to take 5 minutes. I'm going to mute the YouTube, and I'm going to mute this room. And when I come back in about 5 minutes, we are going to look at charts that you guys have posted, and I'm really going to put it on you guys to run the classroom. I want you to tell me what we're going to talk about. Are we going to talk about momentum? Are we going to talk about entries? Are we going to talk about studying? Are we going to go back and circle 1,000 termination conditions? You guys let me know. I'll be back in 5 minutes, and we'll get going. Yeah. Of course you were. It's okay, my hands were really cold, so dodge that bullet. All right, guys, we are back and we're at it. Um, and then before we start looking at your charts, I wanted to address one more thing. Chef put in the room that's what he's dealing with now. Slowing down on the trading, staying focused. I want to cordially invite each and every one of you, and this happens a lot, is people go and they get funded on Apex and they abandon the classroom. People go and they start trading live and they abandon the classroom, and they think that because they're no longer in what they consider to be a beginner state, I suppose, that the classroom is no longer for them. And guys, I want to tell you, and I want to make it very, very clear that I want you to participate even more aggressively when you go live. I want you to show me more pictures. Right, Steve? I want you to take every trade that you take in this live scenario, and I want you to bring it back. Yeah, Ron, I keep trying, but Ron made a key when I wasn't looking. Keeps leaving his belt on my dresser, coming back. And support is great, and that's one of the things. But I see it a lot. I see people decide that they're going live, and they stop taking pictures of their trades. You know, oh, I've got this. I'm live now. They stop using their spreadsheet. So, guys, embrace the plan and keep focusing on the plan. I can tell you that before I swapped over to this computer, if you look on my laptop, there's almost 10,000 pictures on it. My brother probably has about 35,000 pictures. I still do market replay almost every weekend. I still study yesterday's trades every day. And that's one of the things is always embracing what it is that's getting you where you want to be. So just for you people, and I'm not saying that anybody's doing it, but don't feel like the room's not yours. The room is always yours. And there's nothing that's off limits, guys. If you want to talk about any style trade, if you want to talk about entries, exits, if you want help building a management plan, all you have to do is talk to me. And I'm so happy to do it. So Cav got us going on pictures today. The first trade was a pullback into the triggers with the small triggers inside the synthetic triggers. You took the second trade with the same look, both targets. Goal reached. Awesome. And it's interesting. In the sake of building a plan, squares are where your targets were. Okay. So 44 to 55, looking for $100, quick little pop. And then from 54, looking for $200. I like it, Cav. Just going with direction, rooting for that clear path. It's interesting to me that your targets would be on the other side of Fibonacci resistance rather than just below it. But again, it's everybody's going to have their own plan based on the patterns that they recognize. And then John, everything says down. There's momentum. There's a pullback to resistance. And you entered at the mid-band, managed tightly to get out the fib. That's your first Apex trade. Congratulations, John. Congratulations. You took a shot on the split triggers because of all the momentum, and it took you right to the fib. Beautiful. What did Ron say? Even when you know what you're doing, it's like football. Would you rather watch at home alone or a packed stadium with people watching when you're watching? Just saying. Yeah, that's what the classroom is, isn't it? It's a little camaraderie. It's pretty cool that you can hang out with a bunch of like-minded people. Sorry, I'm going to reduce the stress on my computer a little bit. And this really is one of the most, one of the coolest communities ever. So John, congratulations. And there's another one of those examples, ladies and gentlemen. John is trading Apex and already successful inside of his first 30 days with Nexgen through simplicity. Outstanding. All right, Cav. Termination creates the reversal. And then off the reversal, you're trading into the termination condition. Large triggers are down, synthetics are up. Nice job. Taking advantage of the termination that creates the reversal. Guys, notice that he's trading into support right at 32. Textbook termination condition, right? As we teach it, price reached 32, price reached 32. Not one trigger broken. There's not even momentum in the trade, right? Because the large triggers are up and the small triggers are down. And guys, this is an unbelievable chart read. Because Cav knows that when he gets a no triggers through termination and the small triggers start railing down, that's a good sign that things are working the way he wants them to work. And then on his smaller chart that shows change faster, his large triggers have already rolled to the downside. His small triggers are already giving him odds favorable. And guys, this is an unbelievable use of the two charts and the ability to read them to capitalize and make a little money. Cav, nicely done. You guys see how the small triggers came down strong? That's your quicker sign, right? When your large triggers roll, that's your faster sign. Small below the large is odds favorable. I love it. What a great chart read. And the cool thing is let's talk about termination conditions. So guys, I'm going to... Still traveling? That is a big time difference. Chef, you need to take a little time at the house, man, and relax. One of the cool things, I love it. One of the cool things about understanding the chart reads, guys, is when you get these great terminations, right? Decisions are made at key areas and the market reverses. This is when the areas right above them are more likely to break. When you get this great reversal, the triggers are weak, it's at a key area. Hey, John, have a good one. Congratulations on going live. That's when 27 is more likely to break. That's when 32 is more likely to break. So when he gets the same thing up here, this termination and everything's reversal, 32 is more likely to break. 27 is more likely to break. Cav knows this, and he's able to capitalize on it beautifully. And Cav knows it not because he's smarter than the rest of us. He might be, but because he's done the research, he's got the repetitions, and he's seen these termination conditions do what they do over and over. And guys, that's already it for pictures. The NASDAQ has established a range. Does everybody see it? The area didn't break, and it retraced, and it didn't break, 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 and it hasn't broken yet. Can you guys give me a Y in the room if you see it? So Gopher, this is one of those times where rule number 2 keeps you from forming opinions, where rule number 2 keeps you from hoping that the market goes up, or for hoping that with all that momentum the market would go down when the trigger lines don't make it through the key areas. Guys, I'm going to tell you, what you do when there's nothing to do is what's going to create results. But what's happened here is the NASDAQ has defined the range that it's stuck in, very much. And that's Super Bowl. So it's okay to say, in order for me to take a trade long, I want it above the top of the range. And in order for me to take a trade short, I want it below the bottom of the range. And rule number 2 has allowed you to identify that range. Does it mean that there's not opportunities in between? There may be. But for the brand new user, it's okay for there not to be. Whoops. That's what happens when you go to your untitled workspace. Whoops. And then crude oil, there's a pivot stop out. There's resistance with all the triggers below. There were no areas inside of triggers here. There's really no areas inside of triggers here. We're just watching the consolidation, the little bit of indecision. Areas give us a place to bounce. Triggers give the areas some place to reside to help us determine where the market is more likely to bounce from. Notice how we don't have momentum. I don't have an area inside of either trigger. The triggers don't agree. I don't have any rules met. And since I don't, it's okay. It's okay to do nothing. Go into the white line again. From here to here. Going long would be silly in the moment, and it's just too soon to go short from a rules-based example. So my only option is to do nothing. All right, NASDAQ, they're trying, aren't they? They are trying. So let's go through and do a live picture. Let's do it in the moment chart read, because it's all going to change. The market's going up. Nice, Ron. The smalls have broken above the large. I have momentum. But I'm not through my areas yet. So I have momentum. I don't have a clear path. And guys, I want you to see something. I did have areas inside of favorable large triggers. So let's do the picture together. And let's talk about a medium probability trade. I have a termination that creates a full reversal. So this is a strong bottom. I have rule 1 met, which means that I have momentum. Not quite momentum. There we go. But no clear path. And guys, I'm going to ask right now, is everybody okay with this read? Is there anyone that doesn't understand it, that doesn't agree with it? Triggers haven't made it through either of these, really any of these, so I don't have a clear path. But I do have separation between the small and large. And I am coming from a termination that created a reversal. The large chart is 1 out of 2. And where is my picture? I made a little slide chart for you guys regarding medium probability trades. So guys, I have momentum, but I don't have a clear path. So if I turn my attention to a smaller, faster chart, if I have the perfect low-risk entry area, I can take this trade and I can manage it assertively. And I know that I have to manage it assertively because I don't have a clear path. Which means that if I choose to get in right here, I have to be able to identify my trouble spots and maybe take quick profits. Maybe get to a zero loss level quickly. And that's kind of the next step, guys. And that's where you grow with the software, is you go from the idea that all termination conditions are bad to being able to logically talk through what it is that you're looking at, what advantages are present, what advantages are not present, and it puts you in a mindset. If I'm giving up one of the three, I can still take that trade and manage it aggressively. If I'm giving up two of the three, well, it's difficult to give up 66% of advantages and still feel comfortable with taking the trade. So I love this little slide. So when the small and the large begin to overlap, this is literally the life cycle of momentum. Right here, as it breaks above, is the beginning. The large separation is kind of the peak. And then as the smalls work their way back to the large, we're losing momentum. And then once they get inside of the large, then the momentum is gone. So it's like a life cycle. You can see acceleration, deceleration, weakness. Does that make sense, Gopher? Awesome. And momentum is a look that happens on every chart. And that's what's kind of cool, is smalls outside of the large here means momentum. Smalls outside of the large here means momentum. And if you incorporate a range chart, small outside of the large there means momentum. Guys, momentum is universal. It's a separation between the small and the large triggers. So if I have odds favorable momentum here, and I have odds favorable momentum here, and I'm coming from the termination, am I willing to take this trade based on the momentum? And if I do, because it's not a clear path, I still know that I have to manage it a bit assertively. And the answer was yes. I like that trade. That's one that I would have taken. And I would have already been paid on my first contract, and I would already be break even into my trouble areas. And a lot of you guys would take that one too. Maybe you'll show me a picture of it. But the idea, Gopher, is that momentum. When momentum leads the way, the market's more likely to break things. When I have weakened triggers, I'm more likely to get a reversal or a deeper retracement. Got paint drying in the other room. See you, Ron. Have a good one, man. And here's kind of that life cycle again. The termination, the reversal, the momentum. And you can see it slowing. You can see it through the trigger lines when that momentum is going away. And sometimes the market will still go up. But you can literally watch the life cycle of momentum. Let's come back here. The separation is good. And then when it starts to weaken, you'll notice that the market begins to dip and do those things. And right here, momentum for the win on NASDAQ, at least for now. We're still trying to clear these key areas. But that's a pretty good look for everything to the upside, isn't it, guys? That's a pretty good look for an entry. Cav says, with that much momentum, I'm going to get paid. And Cav, I love the way you did this. Cav recognizes challenges. He recognizes potential stops or potential terminations. Cav is outstanding at understanding when areas are likely to hold or break, but he also understands that with this much momentum, there's almost always a retest. And Cav, you got it. You got your retest. And you took 2 contracts at 40 and 160 per contract. That's a $300 trade, guys, in a matter of seconds, based on momentum, based on the entry area. And Cav, I don't think you could have done that any better, my friend. And I love that you got in down here on this one and not at these 1-to-1s. Great patience. Not hoping that you're going to miss something, right? Just saying, hey, I know where my entry is, and I'm going to wait for it. It takes a while, doesn't it? I'm that nag. Nag, nag, nag. Cav, cav, cav. All day, every day. But you find that the perfect entry creates a manageable trade. So let's use this for examples. Cavs in at 40.50. Go for about, I don't speak Morse code. And there's his reversal bar that takes him in the direction of the trade, which means that Cav's stop is approximately 37.75, which is 2 1/4, which is about $45 worth of risk on this NASDAQ trade once it gets moving. That's pretty awesome. $45 risk once it gets moving. That's not a lot of risk, guys, to make $360. And it's still going. Go for guy, did you change your mind? Resistance is still holding. Guys, the record for questions asked in this room is about 250 over the course of a classroom. And it still didn't feel like enough questions. Still didn't feel like enough. Because if you don't have all the answers yet, then you should be asking questions, right? Because I'm going to run out of stuff to say, and then we're just going to have to stop class, and I don't want to stop class because my rules aren't met, so I'm not going to take trades. Let's see if I can open up the S&P. I don't think I've even opened it yet. I did a complete rebuild this morning, 100% rebuild this morning on everything. Bum, 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 bum. What do you guys think? Can you do it? Is it doable? I feel like it is. Should we just click on pictures? That says Michael B is perfect short. I wonder what it is. It's a 50-50 trade, and he takes a momentum style entry. It makes money all the way down. It's not a high probability trend trade, but it is Michael B's perfect trade. That's the beginning of odds favorable coming off a termination. There's a pullback just below the 1-to-1s inside of favorable large triggers. And down it goes. Once again, patterns for the win. Alex's perfect trend trade short. Everything says down and the path is clear, and he gets in at resistance. You guys should go through and look at these pictures. Look at this. My S&P is coming up. It's still calculating though. Dwight, anything you want to talk about? Pedro? Jose G, always good seeing you in here. Lyle, anything you want to chit-chat about? Cav, Walter, Joel, Benoit? I wonder if I said that right. I think I did. Joel. Siva, hold it. Siva's in my room? Oh. Guys, this is like having Einstein watch you talk about string theory. That's a little nerve-wracking. Did you owners know that over in the trading room, over in the traders chat, there's people that have been with Nexgen for like 15 years. Momentum style entries, Haji. Can you show me a picture of one of yours? I'll tell you what, I'm going to break it down into a couple different parts. We'll go to the rules as well. You don't have any? Okay. No worries. So we'll go through and we'll talk about a couple different things. Let me get these charts in place real quick for you guys. And we'll see if we can find one. So for a momentum style trade, ideally, Haji, and this hasn't happened today. There hasn't been a whole lot on the S&P today. In a perfect world, a momentum style trade is going to stem from a termination that creates a full reversal. And that's kind of your best of the best. And then once you get a no triggers through termination, you can see how they line up here. Well, and that one doesn't give an opportunity. So that's a horrible example. That's okay. Let's go to the user guide. Actually, you know what? We'll start with, so Haji, for a momentum style trade, you have to be able to identify momentum. That's the first part. For a momentum style trade, understand that momentum is universal. Large chart, small chart. And your advantage is going to come from having momentum on both. And then if we go to the rules, tops and bottoms. And you'll find this. And you guys, the pics that I posted on today's chat, they're all in chat for the most part. They're all in the chat box. The easiest way to do it, if you want to save them to your computer, let me scroll up. You can right click, save image, and it'll ask you where on your computer you want to save it. So if you want to put it in a file, you can do that. You can also open up the picture. Whoops. Open it up in the browser, and you can save the screencast link or the Discord link and put that into a spreadsheet. Or if there's one that's specific that you want to see, that you wanted, let me know, and I can bundle them for you and try and help you out as well. No worries. Great question. All right, so Haji. HVA momentum trades. This is the momentum trade rules. And notice that rule number 1 says good top or bottom. And guys, this is ignored a lot. Reversals or breakouts of fibs are preferable. What does that mean? That means that either the market hits an area and reverses like we looked at in the S&P, or that breakout look. And what's a breakout look? A breakout look is if this decides to break. If this area of resistance decides to break, guys, this is a breakout look. The momentum is coming up. There's a well-defined area. You see it on your small chart as well. And you're looking to trade the breakout with momentum. So Haji, this is pretty timely here. And you're going to let it break out on the small chart first. You're going to make sure that all your price bars clear it on the small chart first, because you don't want to trade into a problem area. You want to trade from what used to be a problem area. And the key is that the lines haven't gone beyond the tops or bottoms. So when you're looking for these good tops or bottoms, guys, none of your trigger lines break through. when you can define a strong termination condition on all of your charts. What does that mean? That means no triggers through on the large chart. That means maybe a divergence right off the fib on a small chart. That's the best look, guys. Momentum trades have a higher chance of winning when they're coming from a termination. The second rule is there can't be something in your way. Just because you're coming from the termination, guys, it doesn't guarantee that areas are going to break. So you're taking that great lesson from the high probability trend trade and making sure that you're not trading into an area. And it says under no circumstances trade directly into a fib-based termination area that has the potential to reverse the market or after price has lost momentum. Make sure that you have room to your targets. And the more room, the bigger the target, which is nice, right? Because it's momentum and we're expecting that momentum to carry. And then entry at the areas and the triggers. So rule number 3, pinpointing the entry involves looking for specific indicators such as fibs, mid-bands, or one-to-ones, right? Just like the high probability trend trade. When the small triggers are at or beyond the area used for entry, utilizing this technique will define the entry area for each trade. So with everything up, if we're looking for the Fibonacci breakout, we're looking for the area right at small triggers. That's it, man. The ES has done very little. So there's our termination condition, no triggers through, and we're looking for it. We're making sure that we have room. And Haji, I just can't seem to find an instance of the momentum having taken place yet today. I'm scrolling back and looking for it. See if I can find one. Haji, this is a pretty good look right here, and this was at 933. So let's see what the large chart looked like at 933. All right, look at the momentum at 933, Haji. On the last chart, there were bars on top of each other. In 1 second, we'll figure that out. So Haji, I'm just giving you the look right now. When the momentum is strong and the momentum is odds favorable, price breaks an area and pulls back to it. That's a momentum style entry. That's kind of what it looks like when there is, excuse me, a momentum style entry. And you know what? I think that I sent one to somebody not too long ago. Let me take a look. There we go. The large triggers may not, nope, the large triggers probably won't be there. But what you get is that termination. You get the small triggers strong, everything rolls, large rolls, smalls down. Notice that you have odds favorable. It breaks the one-to-ones and pulls back to the one-to-ones. That's the look. That's the basic look. But the termination is important, right? But the strong triggers are important, but the clear path is important. So you have to put it all together. And I can't tell you how often I see new users come through and they say, hey, Mark, I took the momentum trade and it didn't work. And I'm like, but dude, you don't have momentum, right? Not like you do there. So momentum is the key, without a doubt. And then go for, I'm not sure, well, this was the live market, so I'm not sure what we were looking at. We were on the S&P, is that it? Where do you see bars on top of each other? Big chart or little chart? I think we may have caught you with an optical illusion. No worries. If the bars print on top of each other, something went wrong. But you will see down, up, down, you know, 2 up, down, up. It looks like jail for a second. That may be it. Yeah, exactly. And notice that you never had a clear path. I think this is one of the coolest lessons ever. Watch this when I circle and kind of split that fib. Look at what your small chart looks like. And this is why I say, and this is such a great picture, is decisions are being made at these key areas. And since you guys know about them and you have a recipe for understanding when they're broken or when they're not broken, Rule 2 says, hey, don't go short into the area. And thank goodness, because you didn't win. And rule number 2 also says, hey, the smalls are below the large. Don't go long yet. You don't even have momentum. And thank goodness you didn't, because it would have lost, right? And guys, 90% of your day is doing nothing. But it's amazing to me when you look at these key areas and you see on the smaller, faster chart the indecision, the fighting, and all those things that happen on a smaller time frame, it really kind of cements the idea that these are where decisions are made, right? No triggers through, weak triggers, and it's confirmed with divergence. There's never a reason to try the long. Odds favorable, everything says up. Where was that? 1422. That was it right there. Right? So when it's good, it's good. And when it's not, it's okay to do nothing. And I guess that's where I was going with that one. So what do we have now? I've got strong triggers. Everybody give me a Y if you see it. That's odds favorable momentum. That's the best of the best. I don't have a clear path because my large triggers aren't through yet. I am coming from a termination that created a full reversal, which is a strong bottom. So if I get a reversal bar, let's go through it. From the top of my triggers to the bottom of my trigger lines. That's where I'm looking for areas. So Gopher, this is how we refine the 1 bar. And now we take it even further. From the highest point of support inside of triggers, which happens to be that fib, to the lowest point of support inside of triggers, which also happens to be that fib. So Gopher, what we've just done is we have identified one single line inside of favorable large triggers where that market is most likely to continue in the event of a pullback. Does that make sense, everybody? And then the new users are going, awesome, right? But it's not quite a clear path. Not yet. So if it does pull back, it's a medium probability trade, which means that it has to be managed assertively. If it does pull back, I've got to watch out for divergences, right? But the idea is that you see this picture so often that you can find it in the moment. And I'm going to do it one more time here. If I come through and I just start annotating, Rule 1, oh, not this one again. I want this one. I thought I deleted this one. All right. So what we're going to do is we're going to simplify. We're going to take a picture that's standing still. And Rule 1 says that we need strong triggers. So I have strong triggers. Even though the bar seems to hesitate, the bars will hesitate, right, Gopher? Because, so check it out. I love that you said that. So there's 2 forces, right? There's sellers who want it to go down. Guys, these slow periods are where the education, I think, is the best. And then there's buyers who wanted to go up. And that's it. That's all there is. And in order to make this happen, you have to have a lot of money and a big push. And what happens is on the large chart, you're going to see that one bar, right? Inside of this one bar, gopher guy, the sellers may push and the buyers may push and the sellers may push and the buyers may push. And then they get to this point where they push equally. There's your hesitation. And then the buyers push harder and the sellers push harder. And that hesitation is when the opposing forces are equal, right? So you'll see it in a live market. It's hesitating because the buyers and sellers can't figure it out, right? Neither one of them can take a stronghold. Neither one of them can go through. There's a group of sellers that want to push it back down. And there's a group of buyers that are trying their hardest to get to the next key area. We see that the buyers have an advantage because of the momentum. We see that the buyers have an advantage because of the color. And if they do let the sellers push, we've identified where the buyers are most likely to push harder. So when you see a market hesitate, it just means that they're fighting. It means that they're literally trying to sort it out. And hesitations are fine. Hesitations are okay. They're frustrating because you've got to sit and not outthink yourself. But that's a normal part of it. And you'll see it a lot at key areas. When you get into something like this, where it's a termination, full reversal, odds favorable, one divergence, the small crowd's pushing, right?
Order submitted.
And the buyers are trying to push it up, and the sellers know exactly where they're going to unload on them. And they typically unload on them right at an area inside of favorable large triggers. And you can put a limit order right there to try and be on the side of the sellers, but that's why we're a tick or two lower. Because if it gets to their line and they let go, you may not get filled. But if you get in a tick or two before they really unleash, well, then you have an opportunity. And again, this would be a medium probability scenario. I have a termination that creates the full reversal. I do have odds favorable momentum. I do not have a clear path. It's 76.59, which means for the brand new user, I'm not giving up momentum. And if divergence prints, your KISS plan says shut it down. As you grow with the software and you see patterns, you may say, well, decisions were made by the sellers that created all this momentum. I'm willing to take a shot on this trade with one divergence. And the buyers couldn't even push it. That's why we get in at the bottom. But look how it hesitates right at the fib. Right at that decision-making point. Isn't that outstanding that you know where that is? And you don't have to say, but they're hesitating. You can say, it makes sense they're hesitating. That's a key area. There's a fight happening there. My best chance of success happens in between the key areas, but sometimes they'll give me an opportunity. And they'll do it with odds favorable momentum. And they'll do it with a low risk entry. And I'm willing to lose 50 bucks. Taking a shot with this momentum from a termination. And Gopher, you're going to get to the point to where you speak to yourself that way all day long. And you'll be amazed at the things that you recognize. So it makes sense that the buyers would push again, right? Because the path isn't clear. Does everybody see it? The buyers pushed once and the sellers tested the water. And the buyers pushed again.
Order submitted.
And maybe we're waiting a tick or two below resistance. Let me cancel that. We'll at least put an order in there.
Order submitted.
But this would be what we call a medium probability trade. Your large triggers encompass the one-to-ones. Mine are well below. Do you have the newest software, Hypoxic, with the newest templates? Because I don't have any secrets on mine. Mine are downloaded directly from the resource page. 100% ran the file. But if you're still running old templates, if you're still running old software, the new templates keep your colors focused a little bit longer so that you don't miss opportunities. Best thing to do would be to hop in with Jason real quick and see. Have him run through it. Make sure that you're 100%. You would remember, right, if you got with Jason and he said, hey, let's install new software. That's something that you would probably remember. And then Gopher Guy, if we do get filled for some reason, does it make sense that if the market goes up here, I no longer want to be in the trade? Does that part make sense to you? If for some reason I do get filled on this medium probability trade, 4 or 5 ticks beyond 71 is right there around 75-ish, 76-ish. So I'm not going to risk more than $70 a contract. You don't even have to. I'll have a stop in place. If we get filled, watch this. Let me get us filled.
Order filled.
There's my protective stop. So I get into every trade with a protective stop. I get into every trade with stops and targets, 100%. I don't hesitate. So if I'm in at 65, I have to make it to 55 to get $100 out of this trade. If I get a reversal bar, and guys, I'm in a little low here, and I'm in right into trouble, which isn't always the best recipe. But my stop is where the market shouldn't go. Of course, it's bigger because I jumped in early. My $100 is at 55. My $200 is at 45. And that's really kind of all we're doing. So go for the only thing for me to do at this point is either get a reversal bar or get stopped out. And guys, please understand that I jumped in low. I jumped in $50 lower than I should have. I doubled my risk on this trade by not waiting for an area inside of favorable large triggers. That's a good lesson. And I'm also trading not with a clear path. That's a good lesson. So the reality is I would have wanted to be in right here where the market is going. There's my entry at 59, right? We'll sell it.
Order filled.
Which means that now my first target, because it's a 50-50 trade, is at my trouble spot. It's right at the area that's creating challenges. It's right at the area that hasn't broken. No gap theory. My reversal bar is up here. My triggers are well below it, Pedro. No gap theory at all. It's still a medium probability trade, guys. This area still isn't broken. Divergence says that it's still problematic. Your KISS plan says do not take this trade. Your KISS plan says divergence kills 50-50 trades. Does that make sense? All we're doing is we're kind of going through this for the sake of lessons. You have to identify where the market is most likely to continue so you know where it shouldn't go. And it keeps you, watch this, divergence on a 50-50. If this market decides to rail up, do you see how you can mitigate your losses? You can make them lower. But I also want to show you, because there's people going, Mark took a loser in class. On a 50-50 trade, no divergence on the 5-1. Divergence, no trade. If divergence prints exit trade. Guys, I did this just as an example. So Gopher, you can see that you can have a small amount of risk on these medium probability trades. It doesn't mean that it won't go down, but this divergence said that it was likely to push up higher. And that's just repetition. Over and over and over, looking at these things. But so until you can read it in the moment, it's more advantageous to keep it 100% focused. Did that make sense? I hate showing you guys losers, but sometimes it's okay. Because we broke the rules. Didn't we? So someone like Cav, who lost the trade, is like, that's okay, I took a calculated risk. But somebody like Gopher that's brand new says, oh man, that's some crap, I lost the trade. And it would have gotten us. That divergence, that loss of momentum said, hey, we might push up a little bit more. right at the decision-making process. And I think that that's a big part of what we do, guys, is getting so much repetition, so many patterns in, that you start saying to yourself, Andy, I did a 100% enema this morning. I killed every one of my workspaces, every one of my templates. I took every bit of my data out of the situation. I downloaded 100% fresh. Yeah, if your crude oil is going up, there's a problem. Well, that's the S&P. So that's going to be the first challenge, Andy, is your crude oil is the S&P. Mine is CL. Here you go. Now your crude oil looks like mine. That's okay. This happens at contract rolls too, is we'll be on separate contracts. And you'll be like, dude, our charts are so different. I'm like, oh, we're on different contracts. Look how the momentum took it up to the key area. Just didn't give us an entry. Yeah, I had enough last night with the Super Bowl, right? All right, and let's go through the next phenomenon of following rules. If you still chose to take this trade, right, and you got excited and you're like, oh, I'm in and my stop was huge and it's going down. Now you have two divergences on a 50-50. Now you have small triggers above the large triggers. Now your large triggers are trying to roll. Do you see how one divergence can mess things up? Two divergences is even worse. And look where price is. We're on the wrong side of everything, guys. Does that make sense? And this is the 50-50 conundrum. And this is why the 50-50 is the most lost trade, because your brain instantly goes with what if. I know that there was divergence, but what if it decides to go down, right? I know that there was a second divergence, but what if it decides to go down? I'd hate to miss all that money. When your plan is so clear, one divergence says no, another one prints, get the hell out. And guys, this is why we talk about optimizing your chances of success. 50-50, no clear path, broke the rules, divergence on the 5-1, and there it is. But Joel, that's a 6-tick loss, right? And that's what I'm saying, is that you may eventually say it's worth 6 ticks from a good top with divergence. And does it mean that you took a bad trade? Absolutely not. It means that you took a calculated risk based on your chart reading. You said to yourself, hey, because of this great top and this much momentum and that little bit of risk, I'm willing to take a shot at this one. And guys, these shots get easier when you understand that losses happen. And the further you deviate from patterns that have been proven to win more than they lose, well, the more likely it is to lose. So if you took it with one divergence, man, that's great. If you took it with two divergences, well, now you're just pissing in the wind. Joel, I love your trade. I love everything about it. And I probably would have been willing to lose that one as well, based on the good top, based on a termination that creates a full reversal. So I hope that helps a little bit. And for you guys that are taking losers, this is why it's so important to write on your charts. And I'm going to do exactly what Joel did. Let me pull up that KISS plan real quick, guys. And what I'm going to do is I'm going to take a picture of my checklist. If you have Snagit, you can do this. If you don't have Snagit, you have to type it. But I'm going to tell you guys right now, I think it's better to type. I think that you understand the rules more clearly if you take the time to type it out. So, did we have odds favorable momentum on the 13-2? Guys, work it through me. This is how you police yourself. I would say that's a resounding yes. That's a beautiful look. Are my smalls outside of the large on the 5-1? Yes. No divergence on the 5-1. No. What does this no mean? This no means that I took a medium probability trade and I let something else be against it. From a good top or bottom is a yes. So I'm 75% on a trade that isn't 100% advantages. Only you can decide whether or not you want to take this trade. But if you have this checklist memorized, if you have the looks memorized, if you understand that this isn't a high probability trend trade, that it is a medium probability trend trade, what it does is it keeps you focused. And there's your reminder, divergence, no trade. So some of you lost money. Some of you didn't even risk it. And neither of you are wrong. And I guess that's what I'm trying to illustrate here, is that you're going to learn to read your indicators to a point to where you're good. And then Dwight says that when a termination creates a full reversal and everything is its absolute strongest, he'll try to ride that wave of momentum up to the fib, up to the problem area. And Dwight, you did it perfectly. So Haji, as you're trying to figure out momentum, this is another one of those looks. That is odds favorable with a clear path, and this is where there's a lot of regret. Dang it, it's never going to come back and get me. And Dwight just says, well, shoot, I'm just going to ride that one. And then he sends Ron C. $50 and thanks him for the look. And you did it again down here. Odds favorable, clear path. This isn't something that Nexgen teaches, but this is something that's come about and a lot of people have adopted it. And Ron C. started it. And Haji, this used to give me heartburn because he didn't wait for the pullback. And here I am trying to teach these high probability trend trades. And here's this jerk coming in here making $1,000 a day on this look, right? And I'm like, oh, he's undermining everything that I'm doing. But guys, he'll tell you, he'll scream at the absolute loudest in this room that he had to learn the high probability trend trade. He had to understand momentum and a clear path, and he had to have a grasp on where the market was likely to go and where it was likely to stop. And then once he put that basic foundation in place, he created this trade. And he's created another trade as well that's outstanding. But it's on the premise, exactly, Haji, is you don't have to hit a home run every time you swing the bat to be successful as a baseball player. It goes back to Moneyball. Get on base, right? The guy that walks 8 out of 10 times has a better chance of scoring more runs than the guy that's hitting 300. So $100 a pop, do it 3 times a day. That's $72,000 a year. That's an outstanding year. But you have to have a plan, guys. So I'm going to take 5 minutes. And then Haji, some people will use that as a momentum look. When the 50-50 fails and 2 divergences print and everything is green and up, bing, bang. That's a quick home run right off the mid-band. Maybe not yet for you guys, but you'll get there. So guys, I'm going to take a few minutes. I'm going to walk around, stretch my legs, refill my water. When I come back, it's up to you guys to make me smart. It's up to you guys to tell me what to talk about. So I'll be back in 5. our days and our nights, of our wrongs and our rights. at work and lay down? You want to take a nap? No. Fucking software. Alright guys, I'm back, and apparently NinjaTrader didn't want to stay up for me, so let me reload it. Telling you, I am having every computer issue that I can have today. That's okay. Some days it happens. And this is the day to do it, right? When it's nice and slow. So we'll bring crude oil back up. And we are good. What do you guys want to talk about? This is where I put it on you guys. We've got 30 minutes. We can talk about momentum and terminations, and we can talk about 50-50s, and we can talk about anything you guys want to talk about, or we could talk about absolutely nothing, and we could all go grab our golf clubs and swing them. Mine says cold weather, though, so I don't know if I want to go swing golf clubs today. So Haji, as you build, oh, he may not be in here. There he is. As you build a plan for momentum trades, this is good for all you guys that are looking for trades outside of those high probability trend trades. Use this template, guys. Go through, define your entry. So, and you want to do one together? So as we are building a plan for the momentum trade, what did the first one say? From a strong top or bottom, right? No triggers through. That was the first rule. What was the second rule? No termination conditions present. Whoops. And then I believe it was enter at an area at strong small triggers. And then go start taking pictures, guys. This is how you create new plans. You begin to recognize things, and then you start taking pictures, and you create an entry list. And eventually you've added to your plan. You've made it bigger. You've made it better. You've made it stronger. Dwight, we saw this one. It's a clear path with anything can happen. Let me hear your feedback. Anything can happen. So Dwight walks up to me on the street and says, "Hey, Mark, you gonna punch me in the nose?" And I say, maybe. That's kind of what we're looking at. It's a clear path, but it's weak triggers, right? It's weak triggers on both. So what do weak triggers mean, Dwight? Let's talk through it. If I have weak triggers, isn't it possible that the market may retrace further? Isn't it possible that there may be a little bigger pushback than I might hope for when everything is strong? Does that make sense, Dwight? There's the first one. I actually like this picture a lot. So I've got weak triggers. Anything can happen. It can retrace further. So Dwight, if I'm trying to pick where I'd want to see it retrace to rather than just jumping in, I've got some pretty good ideas here, right? I've got an area that was broken. It happens to be inside of favorable large triggers. So let's go back to the picture. I don't have momentum, so I'm going to make sure that I have a clear path and that I have something solid for the market to bounce off of. Does that make sense? And then when you look at your other one, you had momentum and you had a clear path, and you said, well, since I have momentum and a clear path, I'm going to fudge my entry area to take care of it. Guys, I love it when you talk to yourself in terms of advantages, because what you'll find is that you're going to catch better opportunities and have a more realistic expectation of what may happen. So based on this look, what I have to say to myself is, without the momentum, I don't know where it may continue up. Therefore, I'm going to give it a super solid place to bounce. And let me open up my S&P. It's going to open over here off to the side. So when it does, we'll take a look at it. But it looks like it's still going up, right? Trading right around 60-50-ish. We'll see what happens. I'm calculating right now. Dwight, do you have a picture of what happened after? Did it retrace? Did it continue up? Did it hit a line? I know you guys think I'm crazy telling you, hey, talk to yourself in terms of advantages. Talk to yourself. At least know what you're getting into. Know which hat you're wearing. Okay. And then let's take the synthetics out of the equation, because I think that's what I didn't do here. I'm going to put a line, Dwight, on the small triggers, and I'm going to put a line on the top of the large triggers. Anything can happen here. Can we agree that there is a gap between the small and the large over here? So the small chart has odds favorable, right? We take the synthetics out of the equation for that one. That's one of the things that drove me nuts with Ron C's trades. Is I'm like, but it's not odds favorable. And then I realized that the smalls were inside of the synthetics, but they were outside of the large. So anything can happen, odds favorable, clear path, area for entry, and then you're just kind of waiting and you're looking to see what happens. And it goes right to those small swing 1-to-1s, and it made it. And then let's look at the small chart. And then your small chart, now the smalls are working inside of the large right at the magenta, so now you're giving it away again. So I think, Dwight, could you have taken a shot at it? Small, manageable? Maybe. You are taking the trade? Remember, my feedback may be designed towards education. But I feel like, and my triggers look a little different than yours, but based on your trigger lines, I like it. And until you get a loss of momentum, enjoy the ride. Wouldn't you agree? Until you get a loss of momentum, enjoy the ride. Oh, not taking this trade. So if you did, nothing said get out yet. And that's one of those ones where you're like, man, it's not the strongest, but it just keeps going. It happens. We talk to ourselves in terms of advantages. Who knows? Maybe they'll hit 69 without hitting the brakes. There's the fight. Where's my other chart? There it is. Does everybody see how there's not an area inside of favorable large triggers here? You tried the first pullback, it didn't make it, Andy? Yeah. That just means it's not your money, brother. Belongs to somebody else. And that's okay, because your money's out there. No areas inside of favorable large triggers. Heck, the triggers aren't even favorable. They're split huge, right? And now on crude oil, I've got 1, 2, 3 divergences in the same price range. I don't feel inclined to go long until I get to the other side of trouble. Your plan may be something different, but mine says it's cool. I don't really have to worry about it. I'm sorry, Don Sanchez. Were your stops in place? Were your targets in place? Did you lose money because of NinjaTrader, or did you lose money because you took the wrong trades? I always try to clarify that. Because I've lost, usually when I'm on NinjaTrader, if it crashes and I'm in a trade, my stops and targets are in place. And if you're trading Apex, then they have the ability for you to shut down remotely as well. And I hope that you incorporated that. But I always ask myself, and I've had people do this, man, I was in a long trade and NinjaTrader crashed right into a pivot stop out at resistance, and then I lost. Well, your stops are still active. They're mechanical, right? If there was a management opportunity, and I don't know what happened to you, Don, and I know that it's frustrating, and I've been there, but every time I've ever lost NinjaTrader mid-trade, I've been able to open it up with my stops and targets still in place. Which means that if I was in the right trade, sometimes I come back and I've already been paid, and sometimes I come back and I've been stopped out because it didn't work. But they are electronic. So they're through the brokerage, not the NinjaTrader platform so much. The NinjaTrader platform is a vehicle to it. But if you have Apex or Tradeovate, right, or Rhythmic, you can go through and you can close it out. So you can open up your Tradeovate and you can literally close your position remotely from the website. You should have that up and running every time. Or if you're in Rhythmic, you should have your Rhythmic up so that you can manage remotely in the event of a problem and close your positions. And it'll allow you to flatten everything. So if you've never done that, go explore that a little bit today. And hopefully you won't have this, but I don't like you being frustrated any more than I like being frustrated. And I think we've all been there at some point in time. We all want a flawless digital age, but it just doesn't work that way sometimes. Man. Grinding, grinding, grinding. Cav, you are no good at leaving, my friend. Let it break, pull back, everything says up. I love it. I love it. Man, Cav, I gotta tell you, guys, one of the things that I realize about you guys, and you'll realize about me with your feedback, is that I recognize patterns in you. And man, I love to celebrate victories because your entry used to be right here. And now you're letting it break and pull back. And I hope that that's paying dividends for you long run. It's showing a maturity, and it's showing a calmness, and it's showing just such a, you know what you're looking for, and you're waiting for it. And God, that's hard to do. So we don't usually look for our own victories. It's easier to search for our faults. So I just want to make sure you guys celebrate it. And you ask questions and post trades, and eventually we get there together. So thank you for that, Cav. Anyone can do it. 11:05, Haji. I'm going to say absolutely you missed out on it because I'm sure I would never, ever miss a trade. Oh my gosh. I can't even see your entry. So Haji, termination, 3 divergences in the same price range, pivot stop out, full reversal, odds favorable, 50-50. Did you not show me your entry because you jumped in early, or did you get in at the area inside? You were in at 45. So you were in right at support, right at the triggers, and it did go a little lower, right? But great stops because you knew where the market was likely to continue. Cav, that's beautiful, man. 8,000. That's amazing, dude. Perfect stops. You get paid halfway up because you know what? Let's make money. And then as you start to lose momentum, you exit. I love it. Wouldn't have given back as much, but there's no reason to not believe that it's not, like, there's no reason to believe it's not going to make it, right, Haji? Everything says up, the path is clear, nothing's going on. The only thing that might mess it up is you got in 2 ticks above a mid-band, but you did it with a loss of momentum. I think it's hard to be upset with that trade. That's beautiful. And then let me look at over here. So, hey, take care, Cav. You guys have probably seen pictures of this over in the traders room. When everything is up and strong, yeah, we are, Rob. When everything is up and strong, that's a pretty common pattern. One down, one up. Sometimes it happens twice. There's a couple things I want you to notice, Haji, because I know that you're using this this range chart with the faster triggers as you trade the NASDAQ. When these are outside, when it's odds favorable momentum and you're holding for that move, Haji, one down bar with odds favorable doesn't scare me. And what I can do is I can place my stop below where a second down bar would form. And this becomes my stop. And the market goes up and it's still strong and it gives me a down bar and my stop goes below where I let 2 down bars take me out. Does that make sense? And then it just continues. And you never get that up down again. And I'm going to tell you right now, that's one of the ways to catch bigger moves. That's one of the ways to not get freaked out at these little dances in the middle, is when those fast triggers are absolutely screaming. And you will give some back every now and then. You will give a little bit back every now and then. But sometimes, when the large chart says it's likely to go, that becomes a great opportunity. Great picture, man. Sorry I missed it. Now here we are again, 50-50, 3 divergences, everything down, 50-50. The area is still not broken, right? One line, we'll see if it goes. Yeah, Rob, it turns out I'm not the party animal that I used to be. Nexgen was going to start at 10, but I was up at 6 in the morning, so we got going. That's okay. It's the same thing as always. Advantages, clear path, right? Entry areas. The same old rigmarole. And this time it should be recorded with sound. Andy was nice enough to point out that when I got the new computer, I didn't set up my studio the correct way. So I missed out on like 2 days worth of recordings. But Andy, I turned every microphone on. I mean, every microphone on. Let me see. I'll show you. So guys, you owe Andy one. These were all put on default. So I got every one of them set up. I think it's great to recap. I think it's amazing to go back. And guys, I also think, since we have a few minutes and nobody seems to be doing anything, If you go back to, oh, actually, you know what? I'm going to do one better because I did this weekend and it was, I think, brilliant. So this is Discord, right? Does everybody have this look when you come in and you've got all these things over here? So guys, there's a 101 basics, which talks about what stuff is, right? This is your basic, just telling you what's going on, right? And then below 101 basics is trigger reading. And I'm a little embarrassed that I haven't used this as a tool so much. But this trigger reading, let me show you what it does. If you go all the way up to the top, the first picture explains what paints the background. And it's pretty cool. And then the second picture talks about odds favorable momentum. And with both triggers down, when one of the two small triggers is inside the large triggers, it's the first sign that momentum is slowing. Short trades may still be taken if the other charts agree. And when both triggers are down, once both are inside the large triggers, you have a weakening, a slowing of the trend. Anything can happen. I love this picture, guys. This is everything that we talk about, and this is right from the Discord page. And then Fibonacci support with weak triggers may stop the market. So I think it's pretty cool. If you're brand new, if you're revisiting, go back and look at this stuff. Both triggers must be located at least 2 points above the Fibonacci areas. I use the phrase smash for you literal people, at least 2 points. So if this fib's at 64, your triggers need to be all the way up at 66. And if not, Fibonacci may reverse the market. Isn't that cool? And then after it reverses, didn't we see this one? Where the small triggers roll, and Cav took this trade. Where it looked like this, but the large hadn't rolled yet, and Cav says, no, we're going. And he took that beautiful trade and capitalized. So guys, go through Discord and use that trigger reading. That's like the basic. That's the foundation stuff right there. And I can tell you that my brother and I are going to be revamping education a lot, trying to make it even easier. Trying to make you to the point to where you can go through every picture and understand exactly what you're looking at and incorporate the lessons. So guys, I'm going to respectfully ask, hey, look at that, 50-50 with no divergence, and it's going down. Gosh, thanks, Kiss Plan. I'm going to be asking for feedback, right? As I go through and I present pictures, as I go through and I talk about concepts, the more feedback you guys give me, the better everything that's new is going to be. And I'm going to tell you right now, there's a lot of exciting stuff coming from my brother. There's a lot of exciting stuff coming through Nexgen in the next 90 days. So you guys get to help me with it a little bit. You guys get to tell me, hey, Mark, I wish you would have talked about this more when I was a brand new user. Hey, Mark, I wish that there was a clearer example of termination conditions. I wish that we discussed 3 divergences on a higher time frame to create potentially larger moves to the downside. Guys, you notice how 3 divergences? I'm not as worried about this area to break because not only did I get a termination that pushed into it, now I got a third lower divergence and no slowdown. The buyers didn't cause any momentum loss, which means that if you got in at 64, you're already break even and up money. So guys, please, 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 if you've been with me for a long time, send me feedback on what you think helped. I'd love to hear it. My email always works. Anything you guys want to talk about? Anything else we can talk about before we call it a day? There's the S&P finally pushed. There's crude oil still working down. So, no. All right, guys. Well, let's call it. Oh, look. Now it's 50-50 with a divergence. Dag nabbit. That's a deal breaker, isn't it? Or it's a sign to not lose money. Love it. Guys, we're going to call it a day. Thank you so much for being here. I hope you learned something.